Hello, what's going on? I'm so excited to be here. It's your girl, Patrina Dixon, the It's My Money Lady. For those of you that are watching, hello. Glad to have you back. If you're new here, make sure you drop down and hit that subscribe button so that you would get the episode sent to you. And those of you that are listening, I appreciate you. Thank you for rocking with me, always being here, and share comments about what you enjoy about this show. Today's show, I have a wonderful guest on. We're going to talk about 3 myths that we want to dispel as it pertains, or debunk as it pertains to credit or credit scores. But before we jump in, for those of you that may not know me, and as a reminder to some of you who do know me, my name is Patrina Dixon. I am a personal finance coach. I talk about all things personal finance. I also dabble in grants for small business owners. So if you are a business owner and looking for debt-free money for your business, you want to consider grants as well. All the information regarding my programs, It's My Money Academy, which is a DIY online platform, and grants for small business owners, where you get grant opportunities. All of those will be down below, so make sure you check that out. Today's episode is going to be about credit. A lot of you, I did a poll, a lot of you want to know about credit. And you want to understand things that you need to do to increase your credit and why credit is important. So Christina, who I have here, Christina Roman, and she's from Experian. If you don't know who they are, you better Google them because they're one of what I call the big 3 in the United States. And we're going to have her give a little bit about herself. But as it pertains to credit, credit is really important as you think about your financial journeys, because when you have good credit, you pay less in interest, which ultimately means that you have more money and you can access things for lesser amounts, cars, homes, etc. So I asked my girl Christina to come on because she's out there doing her thing, and I wanted her to come to the It's My Money community to talk to you all about a very important topic that will help you along your money journey. And with that being said, Christina, tell them a little bit about yourself.
Absolutely. Thank you so much for having me here today, Patrina. I am the Consumer Education and Advocacy Manager for Experian, and what that is just a fancy way of saying I help to manage a lot of our free educational materials. I get to go out into the community and share credit education. We have a credit chat that takes place every Wednesday, which is where we primarily work with Patrina. She joins us as a guest. She's joined several credit chats, so we're grateful for her time. But each week we talk about a different personal finance topic or even life topic that has a money component to it that you should understand better. So I just have a lot of fun sharing credit education in the community. And then I also help to manage our Education Ambassador program, which is an employee advocacy program that trains Experian employees with credit fundamentals that they can then go out and share in their community. It's kind of like our grassroots education campaign. There are our feet on the ground going out and working with as many people as we can to teach them how to be smart with credit. That's one of the things that I wish I had learned when I was younger, is the role credit would play in my life, how to manage credit, and mistakes to avoid with credit, so that I wouldn't have had to learn that on my own by failing and then having to recover.
Yeah, absolutely. I always say when you met, credit is hard to get your score to the number that we'll talk about here today is harder than it is to make your number drop down. So you don't want to be in the quicksand, and then not just in the sand, in the quicksand trying to come up out of a bad credit situation. You want to learn from what you're here today so that you can begin doing that. So Christina, let's jump in. I want to make sure that you understand the audience is made, my community, It's My Money community is made up of people who, from a credit perspective, that haven't gotten credit at all. So have never used credit before, want to begin to dabble in that. Most it is jumping right into buying a car and or an apartment. Then you have people that have not ideal credit scores and trying to figure out what to do there. And then you have some people just trying to get to that number that, starts with the number 8 and then second number 5. So let's talk. And then there's a third number, you all too. I just stopped there. So let's just think about that audience, and let's talk about the first thing you want to debunk as it pertains to myths you hear relative to credit.
Yep. So one common myth that I hear that anybody that's new to credit should understand, I hear people say that credit and debt are one and the same. And I want to dispel that, because credit and debt don't have to be. Although they're very closely related, credit and debt are not the same thing, because you can open a credit card, you can make small charges, you can pay it off, you can begin to build credit without carrying debt. And it's very important that people understand that, because your credit utilization can severely impact your credit score. It's the second biggest factor impacting your credit score. So we always recommend people, when they're just getting started with building credit, open a credit card, make small charges like charge your gas, something you would normally pay cash for. Put a streaming service on that credit card, charge your groceries. That's all money that you have budgeted for spending for that month, and then you just turn around and pay that back at the end of the month. And that way you're using credit to benefit you. Then you can start to benefit from credit cards that offer rewards, credit cards that offer miles, and you kind of get to have a little bit of fun with the system. Now, yes, credit can be debt in the terms of, car loans, home loans, but that's a little bit different from managing a credit card. So we just want to let people know. I know when I was growing up, my parents said, stay away from credit. Credit's the devil. You just need to use it wisely. When you take out a loan, make your payments on time. That way you can build credit that way, because when you have an installment loan like a car loan, student loan, a home loan, you're going to have a set amount that you're going to pay every month. You make those payments on time, you're tackling the number one issue impacting credit scores, and that's your payment history. Now, when it comes to credit cards, if you make small charges and you pay it off, you're building credit without carrying debt.
Yeah, I love that. That's a great one. And it's almost like we, had a prep session, because I talk about that. I always use, if you drive a car, you have to get gas for that baby, otherwise it's not going anywhere. And that is an item that I always recommend. The streaming service, that one can be a little bit tricky, because sometimes people are paying for streaming services they're not even using. But if you are, I think that's a great one as well. So it's all about, and I love that you put this in here. I was like ready to talk about it if you didn't say it. But if you did not hear what she just said relative to the idea or the myth that she debunked, the first thing started with the budget. So you are charging something on that card that's already accounted for in your budget. So as you want to make sure that is a part of it. Don't just make sure you have a budget, but with that, whatever item that you're going to do, the streaming service, the gas or whatever, it's accounted for here. So when you get that statement here, meaning the budget, when you get that statement, you're paying it based on what you've allocated for, and then you're doing a double duty there. So yeah, I love it. So Christina, myth number 2.
Myth number 2, I would say, is checking your credit report or your credit score is going to hurt you. This is something my husband was getting a haircut at a barber shop, and I heard them they were talking about credit, and one of them said, don't check your credit score, that's going to hurt that's going to hurt your score. And I was like, what? Wait a minute. No. And I felt like I had to say something, because that is absolutely not true. You are entitled to check your credit report as often as you would like. You can check your credit score as often as you would like. You can actually access a free copy of your credit reports from each of the 3 credit bureaus weekly from annualcreditreport.com. Now, this gives you access to your reports, and it's important to check your reports, because your report is the information that is used to calculate your credit score. Your report is that history of how you've managed credit. So you want to see what your lenders are reporting about you to the credit bureaus, because that informs your credit score. Now, when you access your credit report from annualcreditreport.com, you're not going to get a credit score, because credit scores are separate from credit reports. It's actually part of a completely different process. Your credit scores are managed by credit scoring modelers like FICO Score and Vantage Score, and they create algorithms that review your credit report quickly and provide a grade to it. We'll call it like a grade for your report card, right? Or your GPA for your report card. That's a better analogy. So it's your GPA for your report card. That's what your credit score is for your credit report. So if you want to access your credit score, you're likely going to have to pay for it, or Experian offers it for free monthly through our Experian app. So you can access your credit report and your credit score, your FICO score, for free monthly through the Experian app. But also a lot of banks offer it now as part of credit cards. Like if you have a credit card, a lot of them do offer your credit scores. So there's a lot of different ways to still view that information, but you need to do it at least once a year. If you could do it more often, even better.
Yeah, absolutely. So as of since COVID, and they're still offering it on a weekly basis, do your credit history change weekly, like a material difference from week to the next, the answer is no. But it's out there that you can get it weekly. So at a very like Christina mentioned, you want to at least get it annually. I also encourage quarterly, especially depending on your personal situation, because remember, personal finance is personal. So if you got a lot of stuff going on, or to keep your eye on if somebody has used something on your credit, you can see that via that report. The other important thing that I want to double down on what Christina said is annualcreditreport.com. Not free credit report, not like annualcreditreport.com. Make sure that is the place you go to get the credit reports that she mentioned. So although she's from Experian, she's letting you know you can get all 3 credit reports. So that's TransUnion, Equifax, and Experian's credit report. And it's important to look at all 3 because they are 3 distinct different companies. So you want to see what's on there and check your history, check for if there are any inaccuracies on either of them, and then take care of them by each credit report reporting company. So I wanted to make sure that I share that as well. So Christina, great tips. We did 1, we did 2, or myths. Tip debunked number 3. What's the third thing you want to debunk here regarding credit?
I think this is a pretty big one. My myth number 3 that I want to debunk is that when you pay a debt, when you pay like a missed debt, that it automatically gets removed from your credit report. That is not the case. When you have a delinquent account that's been reported to the credit bureaus, that's going to remain on your credit report for 7 years. Now, this is something that I wish I'd known when I was in college, because I was like, yeah, I missed a payment, I'll make it up next month. And then I went that whole billing cycle and I didn't pay it, and guess what? It got reported to the credit bureaus. That impacted my interest rate, that impacted the relationship that I had with my credit card company, and then it impacted my credit report for 7 years.
You hear that all? You hear that, you all? 7 years. 7 years. So if you have a $200, so there's a lot of people now that's starting off with the smaller credit cards, $200 or $500, and you miss one payment. Not 7 payments, one payment, 7 years.
Yes.
So, okay.
Yeah. And it is important to share that that's not just maybe you're a couple days late and you make it up and you call them freaking out like, please don't report me. They're not going to report you until you've missed the entire billing cycle. And a lot of times they'll reach out to you and they'll say, hey, you're delinquent, or maybe they won't even allow you to use your card. Now, if you can pay it within that period, great. You'll probably have to pay an extra fee on top of it. So you always want to know when your payments are due. I think we've talked about this before, Patrina. I like to keep a whiteboard. I used to like to keep it in my kitchen with all my bills on it, so I knew exactly what day. Now I have a note on my phone, but some of my bills are also auto pay. I'm one of those people, though, that I like to know how much I'm paying every single month. I like to see how bills fluctuate, because I think it's important to know that for your budget.
Absolutely.
So I like to keep a notepad, and then I go in and I manually do it. But just remember when those bills are due and make those payments on time. Now, once you catch up, the further away that missed payment is from when you initially missed that payment, the less it's going to impact your score, but it's going to have a very significant impact right off the bat. So you may see that drop, but if you continue the habits of, okay, I will not miss the payment again, and you start to rebuild, then you'll see it start to impact your score a little bit less as the years go on. And then when it falls off, you'll really see that score bump up.
Yeah, I love that. And Christina, just to pull that one through a little bit. So two points, pull that through a little bit more. One is it's important for every credit line, because some people are like, well, I pay my car payment on time all the time, but they're not paying the other credit line. So credit, I don't know, let's just keep mortgage out of it right now, but like the individual credit cards or credit lines. So can you just speak a little bit about what you're talking about is not just for one or your largest one or whatever have you, it's for all of the credit lines that you may have that are reporting to your credit bureau.
Yes, any account that you have that's on your credit report, you want to make sure that you know when those payments are due, because if you miss that payment, it's likely going to be reported to the credit bureaus. And yeah, so Patrina's right. It accounts for credit cards, it accounts for loans, student loans, car loans, home loans. Home loans, you're right, they're a little bit different. They may give you a little bit more leniency, but that's completely different. Either way, still practice that muscle of making those payments on time. That way you already have that that responsibility built in when it's time to really focus on your credit. When it's time to apply for a home, you have that solid history of, okay, I make my payments on time every month. Look, here it is. You go to apply, you feel a little bit more confident when you're applying for major purchases.
Yeah, absolutely. Because and when I talk about credit or teach about credit, it's the like you said, the GPA, like you mentioned. I think that's a great analogy. Regardless if you like it or not, that is a representation of what for some people is your character. So you have said, give me this item, this clothing item, this car, this house, this phone, whatever it is, what they promise to pay back at a certain date and time. And when you don't do that, then they report you accordingly. So if it represents you have said something, which is, give me this, and then I'll pay you back, and I'll do it on this date. And when you don't do that, the score is a reflection of that. So that's what that is. So another thing, Christina, people now are looking into, which is great, is there's a due date and there's a statement date as it pertains to how credit is analyzed. Can you talk a little bit about the difference in the two and how they should incorporate that into their paying process?
Yeah, so I try to keep it as uncomplicated as possible. If you can make, I recommend that people always pay by the due date. If you can make your payment before the statement closing date, then that's just going to reduce the amount that gets reported to the credit bureaus. So it makes your credit utilization look a little bit better when your score is being analyzed. So that is one benefit of paying before your statement date. I tend to like to keep it a little bit more uncomplicated and just say make your payments every single month. However, if you're carrying a balance or you're carrying debt and you want to make sure that it doesn't look as high on a credit report, you may want to pay before the statement due date. That way the balance is lower. Is that what you're kind of referring to, Patrina?
Yes.
Yeah. So then lower utilization equals a better credit score typically, because remember, your credit utilization is the second biggest factor impacting your credit score.
Yes, followed by paying on time. So that in your credit, your statement date can be found on your credit card bill.
Yes.
I know a lot of people don't actually look at the bills because they've said the date, they know what the date is, they just pay the bills. But the actual statement that you get online or that comes in the mail, it will tell you both your due date as well as your statement date. So you just need to go and take a look at that.
Yeah,
so,
and I just really quickly while we're talking about bills, because another thing that you may see, and this is a little bit sneaky, but I'm just going to say it, there's a minimum payment that you'll see on that bill. And that's the minimum payment to meet the requirements that you're not going to be reported late, right? That's great. But that's a very small fraction of what you need to pay back that full debt. And if you really analyze your bill, you'll see it'll say if you pay this minimum payment for X amount of years, this is how much you're going to pay total. And it's pretty eye-opening because usually it's like double what you actually owe. So always pay more than the minimum payment. If you can pay the bill off in full, even better. But I like to bring that to mind because that's another mistake I made when I was younger. I just paid that minimum payment, and then I was like, why is my balance not going down? Like, why do I still owe the same amount? And I actually ended up paying over time double what I owed them.
Yeah, absolutely. And I just had someone come to me recently and asked about the paying the minimum payment, which they were doing, or maybe they weren't doing that. They were doing a little bit more. But whatever it was, that the bigger message in this is that they saw most times looking at their statement over their statement that their payment was going to interest, right? And as we talked about earlier, if you have a credit card and you have a high interest rate, that's usually because your credit score when applying for that card, or since you've had that card, is not at the right level. So meaning it's lower than lower, which equates to a higher interest on that particular credit line item. So to Christina's point, when you have a high interest rate, when you're paying the minimum balance, a lot of that money that you pay, because it's such a fraction of what you owe up the balance, is usually eaten up by covering the interest before it goes into your actual purchase. So it's really important to understand that if you have a credit bill of $500 or a credit limit of $500, you spend 400 of the 500 or even the whole 500, and then they say the minimum payment is 25 and you paid 25, like you have not hit any of the money that you've charged. You're only paying the interest to have the ability to use the card and pay later. So
Yes.
Christina, anything to add to that?
Yeah, and I just want to, just because we talked about this a little bit earlier, this does pertain specifically to credit cards.
Yes.
So your auto loans, your home loans, that amount that you're paying every month, that does factor in interest and principal. So it's important to know that. But this specific topic that we're talking about right now pertains to credit cards.
Correct. Absolutely. So, okay, we talked about 3 myths. And what about what things I can do to increase my credit score? So I know, like, overall this is about debunking myth, but since we're talking about credit, people want to know, okay, I already started. Let's talk about that population, and I'm not where I need to be. And when I keep saying need to be, the highest credit score, FICO credit score you can have is 850 as a credit score, right?
Yes.
So you have some, achievers that want to get there, and talk about how they do that. So they're at one number, whatever that 3-digit number is, and then how they get to wherever they desire as the number that they want for their score.
Yeah, so it's really important to know the factors that go into making up your credit score. So you have your payment history, that's your number one factor in your credit score. Make your payments on time every single month. Your next one is your credit utilization. Make small charges and pay it off. If you can keep that balance to a 0, great. Some people say 30%, that's the highest you want to go as far as how much you're going to charge of your overall balance. 30% is as high as you want to go. 10% or lower is even better for your credit score.
So let me pause you right there. So give you an example. If you have a $500 credit limit, you don't want to have a balance higher than 150 on your card.
Yes.
It doesn't mean you can't spend more than 150, but if you're unable to pay the full dollar amount, you have to pay down to at least 150 and below.
Yes.
And leaving that as the balance.
Yes, leaving that as a balance. That meets that 30% mark. But if you can get it even lower than that, that would be even more ideal for you.
Yep.
So keep that utilization down. Another factor impacting your credit score is your mix of credit. So, some people, they'll start with one credit card. But if you then go on to open a car loan, you pay that on time. You go on to open a student loan, a personal loan, you make that payment on time. That's going to help you to build your credit. You open up maybe one more credit card, and you're showing that you can manage your money. You're shuffling, or you're able to not charge a lot on your credit cards, and you're still able to make your payments on time on all of your other loans. That makes it look like you're more stable. You're able to manage your finances better. So having that mix of credit is really important. Then you have new credit. So are you applying for a lot of credit at once? Now, just because I said have a mix of credit, I'm not saying go out there and apply for all the credit cards and apply for all the loans. Apply for it as needed. Use your due diligence with those, with credit. So you need to look at those factors. And then also, it's really important to check your credit score regularly. I prefer using a credit monitoring app because when you check your credit score, it's always going to come with a list of factors that are benefiting you or hurting your credit score. So this is specific to you. So your credit score is analyzing your personal credit report. So those factors are going to be different for everybody. You may look and see it says you're new to credit, so it's going to take you longer to build that credit score, or it's going to say you have a missed payment in the last 2 years. So those factors are really important to review when you check your credit score, and that's going to kind of give you a better roadmap for how you can improve your credit score. Also, another benefit of using like a monitoring service is sometimes it comes with a simulator, so you can kind of play with different techniques for what could help or what could hurt your score. So I definitely recommend doing that. If you're currently carrying debt, make sure that you pay it down. So if you check your credit score and you find that it's telling you that you're carrying high balances on your cards, we need to focus on getting that debt down. And you'll see your credit score improve pretty quickly as you're paying that debt down. Now, if you need tips on how to do that, I always recommend if you have a couple of different credit cards that you're trying to pay down, use an interest calculator or a credit card payment calculator, because that you can plug in how much you owe, what your interest is, and you could even plug in like a time frame that you would like to pay that debt down, and it'll tell you an amount that you need to pay each month to each credit card to really create that plan. That's one of the tools that I used when I was in my debt payoff journey.
And you can find a debt calculator on my website. It's
Hey.
mymoney.info or it's my money academy, whichever way you want to go. There are various different calculators, debt calculator being one of them. Okay, go ahead, Christina.
Yeah, and then it's just important to know that there's no quick fix to improving your
Yes.
credit score. So beware of anybody that tells you I can improve your credit score if you pay me X amount of money. There's nothing you can pay somebody to do for you that you can't do for yourself for free. We have the possibility to dispute charges on your account. Patrina mentioned if you see an inaccuracy in your account, you need to dispute that. You could do that yourself. Right there on the credit report, you have the instructions for how to do that. And then give it time. So if you've missed a payment, remember it's going to remain for 7 years on your credit report. So just work to get that behavior behind you and start to make those payments on time every single month.
Yeah. And this is what I'll say to you. Like, a lot, people that know my story know that I got into this because, it wasn't about how much money I made. It was more about I didn't know enough about the things that Christina is talking about. And it's like, whoo, I wish I had known this better. And I wanted to, once I learned it, I wanted to go out and teach everybody. So now I've been doing it for a long time. But I want to say this. Don't beat yourself up about where you are
Yes.
right now. Don't do that, because one, that's not helpful to your progress going forward. Learn, like you are hearing on what's being shared. There's many different ways that you can get tips to help you along your financial journey, of people that you know, like, and trust of that's given this information, and execute. So you can watch us, you can listen to us, and if you walk away and say, "Oh, nice episode, thank you, Patrina and Christina," and then you don't do anything, then nothing will change. But don't be so. Number one, don't beat yourself up about it. We are doing the work that we do because there's a lot of people that still need the information, right? And wherever you are in your journey, personal finance is just that. It's personal. So don't make a plan, like Christina mentioned, on the refrigerator. I used to have mine in the bathroom. So wherever it is that you frequent within your home, don't put it in a place like, I want to put it over here because I want nobody to see it, but then you don't see it either, because then it won't be helpful. So whatever it is to you, if it's if you work from home, put it by the monitor, whatever it is, but put it where there's a frequent reminder, so that you stay on point with the goal that you're trying to reach, whatever that may be for you. So no, it's okay. We've been there. We're sharing it with you so that you can go to a different place. And yeah, just take one day at a time. Like I said, having a credit score that's not ideal can feel like quicksand. But know that you can eventually get out. You just have to know that it's going to be a little bit slower than if you were going down a hill and being just fast. It doesn't work that way. And what I love most about doing what Christina mentioned often that I teach is that once you begin to execute on those things, it become a change behavior. And that really is what sustains your credit score once you get it to whatever level you want. So that's why it's really important of the change behavior and how you attack your bills, which then translates to your credit, that translates to your credit score. So
Yes.
Christina, before we end here, so you mentioned FICO, you mentioned Vantiv. Those are two different credit methodologies. In some places, like you said, credit cards, Experian, you'll see a FICO credit score. In other places, Credit Karma and the likes, you'll see Vantage. So let me just say, folks, though neither of them are right or wrong. It's knowing that which one you're looking at, so you know what that is, and know that the methodology is different. What would you want to add, Christina, as it pertains to Vantage and FICO, and who uses which one more, if not only
Yeah,
one?
it's really just important to know that, and Patrina's absolutely right. One is not right or wrong, and I get asked this question, well, which one is the most beneficial for me? And it's like they both are, honestly, because they're both used in different ways. But what's important to know is the score that they're using is informed by your credit report. So that's why we really stress checking your credit report regularly, because that information is what's being used to calculate those scores. Now you'll probably see FICO score in more of credit card lending, auto lending, home lending, and then you'll see Vantage score in situations a little bit more like rental checks or utilities and all of that. But you may still see them in the credit like up when you're applying for a credit card, you may still see that a bank uses a Vantage score over a FICO score. So don't put too much weight on what model it is. Put the weight on what is the information that they're using to calculate that score. So get that credit report. And then once you understand what in that credit report could be informing that score, you can begin to make change.
Yeah, absolutely. Absolutely. So you heard Christina, and Christina, again, she works for Experian. She does financial talk about credit all the time in many different ways. She and I have both participated on Experian's credit chat. You can go on X and do hashtag credit chat, and you can find a ton of information regarding chats that we both have participated on. They have them every Wednesday at 3 p.m. Eastern, so you can check that out. And then that's another way, because what Experian does is curate topics, and then expert speakers aligned to the topics, and then we're sharing our information and our thoughts and our topics and strategies, etc., throughout that whole hour. So it goes for an hour, and then various different individuals are providing information to help people. So that's another way. So this day and age, there's no excuse, people. There's no excuse, and I want you to not be ashamed or care about where yesterday was. It's what's happening today and forward. So it's possible, and we are both examples of that. And then again, hashtag credit chat on X. Wednesdays at 3 is where you can see that happen. And then Christina, I know that there is also like a page where they can find what the topic is about. Say they're not on X right now, but if they want to see what you're going to talk about or have in that particular session, they can go where to see that information.
Yes, if you want to see our upcoming topics, you can go to Experian.com/credit chat. We try to make it as easy and branded as possible. So Experian.com/credit chat. And I believe next week we're going to be talking about financial resilience. So financial resilience in the face of economic downturns or even just the unexpected, because the unexpected hits us when we least expect it, obviously.
Exactly. I always say when I talk about pay yourself first, and I say because when life happens, you have to take care of it. And I said, does anybody say I'm going to go out today and have a flat tire? I want my water heater to go today. Like nobody, it's those things, and you still have to be prepared for that. I know that's a whole different topic for a different day. But Christina, if people are, I'm sure they appreciate what you shared from debunking as well as tips for increasing or maintaining your credit score. Where can they find you? What would you want to leave them with?
Yeah, you can find me on X at Tina, TEENA_LaRoe. I'm always there on credit chat, so if you do check that credit chat hashtag on X, you'll see my responses there. You can feel free to follow me there. You can also follow me on LinkedIn. I'm there under Christina Roman. Just look for me at Experian. You can look up Christina Roman Experian, and I should pop up.
All right. Thank you so much. I appreciate you for being here, sharing, again, 3 tips, debunking about credit, and then how you can increase your credit. So I want to say to you all, the It's My Money community, I appreciate you. Thank you for being here. Thank you for watching. Thank you for listening. If you're not subscribed, make sure you go down and hit that red subscribe button. If you're watching us, if you're listening, make sure that you follow us on the platform that you're listening. And also, this is a fave I'm going to ask you. Please let us know what you think about the episode, and then share if this is something that you think could be beneficial to others. Parents that have children that may be going back to college, share this with children, because we don't want them to make credit decisions when they're away from you that you're not aware of until after they've already done it. So make sure that you share them with those that have headed back to college, or others that may need this information as they're contemplating credit. So again, thank you so much. All the information that we shared relative to places to go to get information, that'll be down there, such as It's My Money Academy, which is where you can go as well. Also, we'll put the hashtag to credit chat down there as well, and then Christina's handle on Twitter as well. So thank you so much. I appreciate you, and remember, it's your money, so do the best by it.